Okay, I'm gonna do my daily review. Today the market just free fell. This is ES, so that's S&P on the daily. We just fell and fell and fell. We had the break and close above the 200 and the 20. I was expecting it to at least rally to maybe the 50 EMA or at least close to it. This candle represents a supply area because when the buyers tried to take it up, sellers stepped in and just drove it quite a bit down. So this is a supply zone that I had drawn out, and I don't know, maybe some traders are seeing this supply zone and just decided to, go ahead and get short. We got a close below the 5 EMA, which isn't the greatest thing, but it was a small closure below the 5 EMA. And also there's a demand zone here, what a lot of traders will call a demand zone in this consolidation. So it can drive it up, or we can just be going back down. We could have taken ourselves to the 50 RSI, which we hit yesterday, and coming back down. But who knows? Like I said, I don't like to predict. I just like to be reactive. We did not get the cross of the 5 over the 20 on the daily, so I wasn't looking for any swings long. I try not to take any swings long until we were at least on the daily in a bullish situation as far as the 5 over the 20. But yeah, we had a nice drop today. The volatility had dried up a little bit, meaning the ATR had gotten smaller, which is nice. I like, because you don't have to risk as much on a trade, but of course you don't make as much. Anyway, but the volatility had dried up. Now today it picked up again. All right, so ES on the 1 hour. When the day first opened, I was like, I don't know if I'm going to trade today. It looks like a see money, take money day. So if I do trade, I'm just going to take trades where I can get in and out. And so that's where I thought we were. We were open in this area. And then this is the 8 o'clock candle. We fell down pretty well. And if I were just trading the hour after this candle, actually this candle, this little, what you would call an indecision candle, was the candle that confirmed the bearish cross of the 5 and the 20. So it was this candle here that confirmed that the hour was becoming bearish. Once this candle finished, if I were trading an hour, I would want to see a retracement back up to the 5 EMA or at the 5 EMA, which we did get above the 5 EMA, and then we just fell down. So that's if I was trading an hour. And if I wasn't so impatient, those are the best trades, because that's why I use the hour as my bias, because usually, and I use the hour to take my trades, because usually you get the moves with the highest momentum when you use the higher time frames. So if I had been looking at this and saying, okay, we got our cross with the 5 under the 20, we're comfortably closed over the 50 EMA, which is this purple line. And then I was like, okay, I'm just waiting for a pull up. We had already pulled up some, and I would have looked for my setup on the 5 minute, and I could have taken that short, and that would have been a great short. Then we came back up to the 5 EMA, and then we came back down. It looks like, when I looked at the 5 minute, it looks like the 5 EMA on the hour is somewhere around the 20 EMA on the 5 minute. So let's look. Let's look at the 5 minute. All right. So I didn't trade ES today. I traded NQ. Okay, as you can see, the day started off. We had like a 1 pop up with this green candle. And I didn't want to get in long because, again, we were flat. So I was take money, see money, whether we're in if I see a bullish pattern on the 5 minute, I'll go long. If I see a bearish pattern on the 5 minute, I'll go short, and I'll just see money, take money. We didn't quite get the bullish setup until this here wick, this wicked candle, this tight doji, which usually represents, in a lot of cases, a reversal. And that's what we did. We had the green, thick green candle, we had the reversal candle, and then we had a red candle. So in order for me to get in long, not only because we had a double top here, in order for me to get in long, not only do I need to see this bullish setup, which it looks bullish, and we did go up higher, it just wasn't sustained. There was a level here that I figured it may go to, but what I needed to see, because of this double top here, I needed to see us break this, close over this, retrace back down, and then go up. So I didn't take that. I did not take that trade. My setup didn't show up. We didn't have a close over this, so I didn't take that long. And then we came down, and with this candle, we had a close under the 50 EMA, and this candle confirmed the cross of the 5 under the 20, which is bearish. This is 5 minutes, so it went down pretty fast, so it was hard to catch. So then we had this candle, which I would have missed, and then we got back to the 5 EMA, and that could have been and when we got back down under the 5 EMA, that could have been a short opportunity. This level here, I have 2 levels. The green is the top of my 1 hour range, and the red is the bottom of my 1 hour range. And the 2 black lines represent the ranges for my 5 minute. So we had a nice red candle close under the 5 minute range that I plotted out, and then we had a retracement back up to it, and it also went back to the 5 EMA. That would have been a nice short. We did consolidate for a bit, but we consolidated because this was an important level. And this was also an important level, so that's why we saw this consolidation for a while. And then we got here and we consolidated because this was the hour low. Let's see. Now, for me, in order for me to take this long, we would have to have at least a close below this and then a retracement back up. And we did that. We broke it and closed below it with this candle. And then we had a retracement back up to the 5 EMA. And then we went down. And we just kept going down. We just kept, every time I was done, and every time I would just check the chart out and see what it was doing, we were still going down. But there were a lot of opportunities if you were willing to trade an shorter oversold market. A lot of people don't like to do that, but yeah, we got above the 5 EMA, we got back under it, could have been a short, got above it, got back under it, could have been a short, just shorting all day. And this line, which is an important line that I drew out, that a lot of people were looking at. Oh, I'm sorry. This line that I drew here represented the top of this gap. We had a gap over the weekend. Was it this week? Yeah, it was this week. The gap we had over the weekend, a lot of people were looking at that gap thinking that we would fill that gap. So I put a line at the beginning of the gap, and we could very well fill it and go back down all the way down here, or to the 200-day moving average on the hour, which would be about the same. But I don't know. We'll just have to see. Right now, we're still looking bearish on a short term 1 hour. The daily is sort of looking bearish. Well, kind of is, because we had a close under the previous candle. And not only that, we closed under the 5 EMA, which is pretty bearish. And then we also took ourselves under the 50 RSI. So, but we'll see. We may just be filling that gap and then heading right back up. All right, now NQ, I took 2 trades on NQ today, which is the only trades I took. It's very similar, but only thing is NQ took its time to close over the 200. And that's why I said, I don't remember which day I said, I don't know if we're waiting for NQ or what. And the thing is, I was wondering if we were waiting for NQ to get over the 200, and then we can see whether we're going to I figured the NQ ES had already went to the 200 and gotten above it. And I figured we may be waiting for NQ to do it. So once NQ did that, we just dropped. So like I said, I don't know if this drop is going to be sustained or we're going to go up. According to my strategy, we came up here. We're still in a bearish pattern on the moving averages. We close under the 5 EMA, go short. But we do have important data to think about that's coming out both Thursday and Friday. All right, so the hour, okay, again, we started off flat. I didn't think I would even trade today. Or I was like, I told myself, if I do trade, see money, take money. It's just when you see some money on the table, run with it. So that was my mind frame. I mean, I didn't think we were going to do this all day. So let's see. We turned bearish with this candle, the same with ES. We turned bearish with this candle, and we came back up to the 5 EMA with this candle, and we got there and could have went short. So this is pretty much the exact same as ES. Then we came back up to the 5 EMA pretty much here and came back down. And this line is the top of that gap. I put that little line there at the top of that gap. And it looks like the NASDAQ hit it and bounced off of it because everybody was looking at that. When everybody's looking at something, you can definitely expect a reaction. Whether that's going to hold or not, I don't know. All right, let's go to the 5 minute and I'll go over the trades I took. All right. So I looked at NQ, and on the 5 minute, we looked a lot more, we looked easier to trade. So I took NQ because at first with ES, we started off bullish. But we had this double top, which is contradictory kind of. But sometimes we break double tops and double bottoms. So, but NQ already looked bearish when at the open of the day. We had the 5 under the 20 EMA. We had closures under the 50. So I wanted to short this. So I took a short, and I was still in take money, see money, because we chopped yesterday and I wasn't sure if we were going to chop today, and I saw we started the day flat. So I did a take money and see money trade. So I saw this, well, first this green candle got above the 5 EMA, and then we had this candle here pretty much close below the 5 EMA. So I waited for the pullback. We pulled up here, and I got back in when we got here. And I took that for a quick 8 points, which is nothing. I think I had my stop at 10 points, but I just wanted to get out, and I just took 8 points, which is $160. But I wish I had stayed in, because look at this. You know, we had like a 100-point move from where I got out and here, which is $2,000. But I didn't know what we would do. If I had multiple contracts, when I'm able to do and I feel good about multiple contracts, then you can always keep a runner. But right now I'm just trading one contract. Okay, so this is the 5 minute. That was the first trade I took. And the second trade I took was what I would call a B setup. We looked good on the 1 hour. But what I didn't like about when I got in this is that we had a potential double bottom here. So I took a really quick trade here. Another see money, take money trade. We got above the 5 EMA. We had a green candle, red candle close below the 5 EMA. And I just got in right here. I just got in because when we closed, we were pretty much at the 5. As soon as I saw this candle close below the 5 EMA, I got in. And it wasn't a great setup. The reason why I call it a B setup is because when we have a double top or double bottom, usually it's best that you wait until you break it and come back and retest it and come back down again. And that would have been an A trade. Once this red candle here broke this, we came right back up into it, which was it hit the 5 EMA as well. then I could have taken that short. That would have been the A setup, waiting to break to see if this double bottom would be broken. Because we could have easily, after we closed here, start heading up, because a double bottom is kind of telling a lot of people maybe we'll reverse. So I shouldn't have taken that trade, but I was able to get something out of it. I don't remember how much. Let's see. I like a 120. So I got only 6 points. I got in and right out because I know it wasn't the perfect setup, but it was my setup. It's just that I should have waited for the double top to be broken. And if I got in here, it would have been a great trade. I would have been in it comfortably and feeling good about it. But I didn't wait. So there was shorts all day shorts, all day shorts. Right here we crossed long. It was after 2, so I don't trade. But we didn't have a closure over the 50, so I try not to take that. So that's NQ. Very interesting day. A complete opposite of yesterday. Yesterday was a chop day, and today was quite trendy. Trending on the downside. So now gold. All right, we're in a range with gold. I looked at gold. I couldn't take a trade because we were just chopping. We're still in this range, and this candle is so tight for today. This is today's candle, and for the 3 days, we've just been in this very tight range. So I could not trade gold today. All right, this is the 1 hour. Okay, we started the day looking bullish, but we hit this which made it a double top, and we had a nice green candle, and we got our reversal candle or our tight doji, and then we had the big red candle going down. So, I mean, like I said, I didn't trade this because it was just a mess. I mean, if you were up last night, we had this cross and then could have got here at the 5 once we had this pull back down. Could have taken this up for a double top. And then we came back down, and this was a nice green candle over the 5 EMA. Could have got in at the 5, the pull back down to the 5 EMA and taken that long. But this was all before market open. Once market opened, that was it. So when I woke up, we had this indecision candle. This is the 7 o'clock candle. This is the 8 o'clock candle. So we started going down. I mean, if you're a range trader, you could have easily just on the 1 hour, every time we got above the 5, went lower. Got above the 5, lower, short. Got above the 5, got back to the 5, went short. Because we just kept coming back to this area right here. It was too flat for me, so I looked at gold and said, it is not tradable for me today. Look at this. It's just a tight range. We started off the day, we just fell, and then we just chopped. We just chopped in this range. I mean, you could have, like I said, you could have easily just got in here short for a scalp, got in here short for a roll, see money, take money, scalp, go up, get back here, see money, take money, scalp down. And, I mean, you could have done that the whole day if that's the kind of trader you are. That's it for gold. Crude, I didn't really look at all. I mean, I literally did not. This is the first time I'm looking at crude. So crude, the other day, like I said, with this candle, this doji. Yeah, see, this was a doji for this day, and we still had it up. So, like I said, there's no such thing as this happens all the time in trading. We have a statistical, way of saying, maybe this is statistical edge that maybe we can reverse, but then you got to look for other things as well. So we made confirm the cross of the 5 over the 20 on the daily with this candle. We pretty much didn't go back down a little bit further, which I normally like to see, but we pretty much, from where we closed yesterday, we just went up. So that's crude. It could possibly get to the 50. I don't know. Let's see on the hour. Okay, we started off the day bullish. So it looks like an all long day. We got below it here. The 5 EMA was over the 20 EMA. The black line was over the red line. We got below it. We got back above it. Could have went long. And we just take longs. We don't look at shorts. Let's see. This is the first candle to close above the 5 EMA. So if I were just trading the 1 hour, I would expect to see some kind of pullback and to see the long setup on the 5 minute. Let's see. Let's go to the 5 minute really quickly. All right, so we're longs all day. So yeah, we got under the 5, take it up. Every time we got under 5, there was a possible scalp up. And then we form what I would consider to be a double top. So that's when you need to slow down with the scalping. With the long trades, going long. Need to take it easy because this is telling us that this may be a resistance level. So in order to get in for a setup, in order to get in for a double top, you need to get above the double top, retest it, and then go up. But then not only did we get a double top, we closed below the 50 and we had the crossover of the 5 under the 20. And then once we got that crossover and we had a closure over the 50, we went up and then we came right back down again. Was only supposed to be looking for longs. So if I had taken this, it would be what I call a B setup. A B setup for me is if the 5 minutes sets up, but it contradicts what the hour is telling me to take. But we have a closure under the 50 EMA. We have a pullback. I can take a short, but it's a B setup. So right here, it worked out really good. We had this candle close under the 5 EMA. The full body is below the 50 EMA, which is the purple line. We finally got our pullback to the 5 EMA, and that could have been taken short to the 200-day moving average on the 5 minute. And it would have been a great trade. And another way to trade this actually is if you could have waited for the closure under this, which it didn't do that till this candle, and then traded this pullback. We had the closure under this. We pull back from that. We pull back up, and to just taking this would have been a scalp from here to the 200-day. But those would be B setups. They're not an A setup. A setups would be long because the hour is still long. This is just a pullback on the hour chart. It's the 5 minute. This is the 5 minute chart. So it's doing a lot compared to the 1 hour. For the 1 hour, this is just a minor pullback to go back up. So I try to stay with the major move. If the move is long, I want to be with the major move because that's where you're going to get the highest momentum. So that's crude for today. As you can see, we're starting to go back up on crude. We had a pullback to the 20-day moving average, which seems to be very close to the 5 minutes 200-day moving average. And we're headed up. That's all for the day. Only thing I'm going to bring up is live cattle got actually kind of interesting. I didn't trade it, didn't look at it. I was just looking at a broadcast that was saying that we went lower on Monday and Tuesday. We went lower. So yeah, live cattle actually had a drop, a pullback. I don't know if we're going to go back up and make all-time highs again, but we definitely had a pullback off of so much running. It looks, and when I did my weekly review, I was I saw this and I was like, I wonder if we're going to have a really major pullback because this wick was huge. Once we made the all-time highs, I mean, it's like everybody sold off, and we ended up with a red candle. So anyway, that's just that. I haven't been trading it, but I still find it interesting. So that's it for today. Today was an interesting day. Tomorrow, I think, will be interesting. I don't know if I'm going to trade tomorrow. I know I'm not trading Friday, but tomorrow I'm going to just let whatever trade come to me if it comes to me, because I'm almost like twice my weekly target. And I don't want to risk that because, you know, That's good enough, really. Uh, so I may not trade tomorrow nor Friday. I'll see what tomorrow looks like. Okay, bye-bye.